Hey everybody, it's me, Gregory Mannarino. How are you today? It is Monday, February 26, 2018, and right off the bat, I am tired today. But look, that's besides the point. People, right now, we are seeing, again, an epic, and I cannot overstress that word, an epic rally going on in the bond market. Please, if you're not watching this video on my website, which I really hope you are, go over to my website, traderschoice.net. There is a link in the description of this video, and go look at that bond market chart. It's just underneath the chat room. Friday, we're talking off the Richter scale buying of bonds, which propped up the stock market. We also had William Dudley, a Federal Reserve president, and the chairperson himself blowing sunshine up the crack of this market. And what happened on Friday? Stocks vaulted higher. They're trying to do that again right now. But let me put a perspective on this again. A huge amount of bond buying is going on right now. The U.S. 10-year yield dropped again. Think of how much cash would have to be flowing into the bond market to cause moves like this. Hundreds upon hundreds of billions. Meanwhile, stock market continues higher, so you understand what's going on here. Here's my take on this. It's kind of interesting. Despite what we're seeing right now, again, pretty much off the Richter scale, bond market buying, 10-year yield coming down, dollar weaker. Despite this, stocks are higher, yes, but they opened up kind of on the weak side and have put on some gains since the open. Speaking of that, I bought this, GE, April, I didn't write that down there, in the money puts. Stock is looking very weak to me right now. And this market, although it is moving up, I don't think they're getting the effect out of it that they're trying to. Again, despite what we're witnessing here, and this is historic in the bond market, with hundreds upon hundreds of billions of dollars flowing into the bond market, stocks aren't doing too much. We had like maybe 1.5% move in the Dow on Friday. Right now, I don't even know what stocks are up. Earlier, the Dow was up over 200 points. It's not all that impressive to me in this kind of environment. You would expect to see stocks up much higher. They are trying hard to push stocks up. What they might end up doing here, and they do this as well, and I'm not pulling this out of a hat, is they start buying stocks. So if propping up the bond market fails, then they start buying up stocks themselves through dark pools, other mechanisms, however they got to do it. But they are so determined to push this market higher, it just makes you have to sit back a moment and say, what's really going on? It's the truth. But again, the illusion must be kept real. People have to be strung along, misled. That's what they do. It's just the truth. It's very sad. It honestly affects me in a very bad way when I think about what is going to befall people at one particular time. For now, you know what to do. You ride the wave. You pick a particular asset. You get in there and you try to make it work for yourself. And I'm trying to make it work for all of you as well. And I think I've been doing a darn good job at that. But again, they are determined people to kill the currency. All of this bond buying, this cash has to be coming from somewhere. And, we had this, the whole market was kind of terrified about inflation. And all of a sudden, it doesn't matter anymore. It's bizarre what we are witnessing. It's literally freaking crazy. All right, with that said, let's keep our eye on all this. Again, I forgot to write April. These are GE in the money April puts. I'll write that in for next time. At the end of the day, so you'll see that, where we will reconvene right back here, and we're gonna put this into some perspective. It's just crazy, but again, please go over to my website and have a look at that bond market chart. Your eyeballs will explode. I always say that. Well, I don't really want your eyeballs to explode, but it may seem like they're going to explode because it's just ridiculous. All right, with that said, I'll see you later.